The rebound already started, but we also talk about there is this commitment bar to the downside that you need to commit above in order to initiate a relatively strong rebound. Otherwise, this is still considered as a super weak rebound. What's more important is the 200-day MA. This is also quite a significant resistance at the moment. Once it's break below the 200-day MA, this become a resistance. That's coincide with the last commitment bar to the downside. That's right at the high at 57.60. If we could see it commit above the key resistance level 57.60, then there's a high chance for it to continue the rebound all the way to the axis line here. The next level could be close to 6,000. If this rebound just have another rejection, it could have another attempt to go up here. It doesn't look that bearish at the moment, but if you want to say whether this attempt to rebound is strong or have any telltale signs that it will turn into some bearish crash, well, it's still unconfirmed at the moment. Because although this form of the rebound is very weak and did not really commit above this commitment bar to the downside and rejected by the 200-day MA, thing is, I don't really see the spike of the supply. Volume has been decreasing. First, the demand is of low quality. Second, the supply is not coming out yet. If you are the composite operator, we need to think about the maximum pain. How could we inflict the maximum pain? I want to see a bar that commit above the resistance level and the volume start to pick up to attempt to break above this axis line and to sell into strength. This is what I would like to do rather than to sell in this weak rebound because supply doesn't really come out at this point. Same as the aggressive demand as well. That's why we need to see a commitment bar that could just break above the resistance level and then go to the next level, which is around 58.70. We need to monitor whether we'll have excessive supply at this key level and also close to 6,000, which is the zone. That's a zone that I will pay attention to. Under the worst circumstances means that the rebound is just too weak and no quality demand, and it just keep coming down and then break down and then rebound again and to just form a trading range here. This is the 50-day MA and that's the 200-day MA. If you are looking for a death cross, could push it to have a cross maybe in another 2 to 3 weeks when we have this kind of the consolidation. Based on the price action, I don't really see threatening supply coming out. The only thing that's making me a bit worried is the struggle to get above the 200-day MA, and also that's also coincide with the last commitment bar to the downside. That's around 57.60. There's still a chance for it to have another go to break above the level and to go to the next axis line, which is 58.60. Probably another 100 point to go. Another level that we could anticipate is to use a FIP. Usually the rebound to roughly around 50% and to 61.8%. That's quite normal. 50% is about 58.35 and to about 59.10. That's the zone that we could anticipate the rebound. That's in line with the axis line and also the next level. Need to watch out for the spike of the supply, whether we'll have an excessive supply coming out at the key level. At this point, this is unconfirmed price action because we still need to see whether we have a commitment above 57.60. That's right at this 200-day MA as a resistance level.